Hello, soldiers. I'm your Sacharaju Kolluru. How are you all? So, this video lecture agenda is May 2022 CA Inter Accounting Paper 1 Question Paper Analysis. Sir, what you are going to discuss in this lecture, sir? At the inception itself, just I want to emphasize here, guys, we are not discussing answers for any question. Then what you are trying to give here, sir? So this lecture is definitely enhance your confidence levels that whether the concept you grabbed from the video lectures as well as material, is it sufficient to crack the examination or not? And after seeing this question paper analysis, your way of preparation may also change for the students who are going to write the examination for their forthcoming attempts, who already wrote their examination. They can cross check that whether the answers given by us in the examination in the correct mode or not. So this lecture is useful for both the students who already gave their attempt or those students who yet to give their attempt. Okay, so without wasting much time, let me directly entering into the question paper. So the question paper is given for total 6 questions. Out of his question number 1 is compulsory. Now I'm talking about question number 1. So everything I clearly framed in my word copy, where how the question number 1 from which standards they covered, question number 2, 3, 4, 5, 6, everything. Okay, and where such question actually we covered in our classroom environment or in material also I'm going to show here. So then finally, after watching the video lecture, then you may get whether the material, you may know the material is sufficient or not for exam preparation. So don't skip any content. So please, all of you watch this lecture till the end. Then only you can know the real maza of the question paper, how they in generally they are framing the questions, and how you should need to connect with your preparation levels as well. Okay, okay, guys. So the first and foremost question, if you check, they asked from AS12. What about this question is all about, sir? And one more thing, actually, I'm so sorry. Before start up with question number 1, and one more issue just I want to tell here, sir. This question paper analysis is not for showing the question paper is very much typical or moderate or easy, not for that purpose, guys. So this question paper analysis is to enhance your skills and the level of mindset you should need it at the time of conducting your preparation, and at the time of going to write your examination, how your mindset will be. This video lecture may give answers for all such type of questions. That is the actually reason I'm taking this examination analysis video lecture. Okay, and at the same time, those students who already gave their attempt, they can check that whether the material or the lectures, whether those are sufficient with the question paper mark. Okay, whether I mean the lectures what you seen or the material what you followed, whether it is sufficient for your examination or not, also you can cross check. Okay, now, so question number 1 is related to AS12. If you check what the question is all about, state how you will treat the above in the books of Suraj Limited. So just they are given 5 different scenarios. For each and every scenario, they are received a certain government grant, how you should need to make account for in your books of accounts. So for example, just let me take up some cases. Suraj Limited received government grant at the rate of 40% towards the acquisition of machinery worth 25 crores. Sir, machinery is a depreciable fixed asset, right? For a depreciable fixed asset, we have 2 options. Either the government grant can be reduced from the cost of the fixed asset, and the net cost only you can shown in the books of accounts, and the depreciation should be provided on the reduced cost. And in another method, the government grant, you can treat it as a deferred government grant, and it can be created to the P&L in the ratio of the depreciation over the life of the asset. We seen all such things. Sir, then where we in generally learn this topic in our classroom, sir? Just a second. Let me directly open my classroom book. That is OneNote. If you check, you can go to AS12. Sir, where in AS12 we discussed about the entire accounting treatment of government grant through a big diagrammatic representation, where monetary government grant, if it is a depreciable fixed asset, if it is a non-depreciable fixed asset, method number 1, method number 2, everything I discussed. If you check, from that they actually asked that question. That means the 40% of 25 crores you can reduce from machinery worth, or you can treat it as a deferred government grant. In another case, it received a capital subsidy of 150 lakhs from the government for setting up a plant, for setting up the new business. If it is to related to the startup of a new business, you can treat it as a promoter's contribution. If it is a promoter's contribution, you can treat it as a capital reserve. Am I right? That is bank to capital reserve is the accounting treatment. It received 50 lakhs from government for setting up a project for supply of arsenic free water in a notified area. Again, setting up a new project, that is startup of a new business or a new project. Again, you can treat it as a capital reserve. So it received 5 lakhs from the local authority for providing corona vaccine free of charge to its employees. In generally, employee expenses are revenue expenses to the entity, but such revenue expenses now we are getting in the form of government grant from the local authority. So that's why any revenue expenditure related government grant, what is the accounting treatment we need to make? It should be created to P&L under other income, or the government grant can be reduced from such revenue expenses directly. Am I right? So the last content given. That means the major topic of AS12 actually they covered from question number 1A. Okay, fine. Just come down. I don't want to read each and every point here. Just I shown whether we already covered in the classroom or not through my notes, guys. Next issue. So if you come to question number B, okay. So question number B asked from AS2. So surprisingly, they not tested the main concept of AS2, the concept you already learned in your foundation, things related to FIFO method, they actually tested. If you check, you are required to compute the following by FIFO method as per AS2: value of inventory, amount of cost of goods sold, profit or loss for the month of June. FIFO method means first in, first out. That means the first purchased goods were sold out. Closing stock itself, they directly given. Sir, at the opening, we have 10,000 units. In current year, purchased 20 plus 10,000. Total 10 plus 20, 30, 30 plus 10, 40,000. Total number of units available for sale were 40,000, but the closing stock were only 13,000 liters. That means what about remaining? Remaining 27,000 liters for sales. Now, the first and foremost question is value of inventory. Inventory should be valued at cost or NRV, whichever is lower. That is the first thing, right? Now, it is clearly given that in the problem, NRV value was not there given. That's why we can assume that NRV is more than the cost. That's why we may directly record it cost price only. Then at which cost, sir? First in, first out means this 13,000 liters are not available from first purchased goods. Those are available from last purchased goods. That means out of this 10,000 liters covered here, yes, it is there. And out of this 20,000 liters, only 3,000 liters are available. That means out of this 20,000, 3,000 liters and the entire 10,000 liters, the total will become 13,000 liters. This is purchase cost. And one more component they given, which is the general overhead cost. Sir, is it general overhead cost is form part of cost of inventory? General overhead cost means, general overheads means selling and distribution administrative expenses. Is it form part of cost of inventory? No. That's why in generally we should not consider such general overheads. We already learned, guys, where we learned. I will open AS12, AS2, just a moment. Yeah. So if you check here from the exclusions, cost of the inventory, administration expenses, selling and distribution expenses, all these are the general overheads. So general overheads are not form part of cost of inventory. Only purchase price is form part of inventory. Therefore, 3000 multiplied with 90 plus 10,000 multiplied with 95, then you will get the value of inventory. Do you understand? Sir, cost of goods sold, how much, sir? Sir, sales units 27,000. Out of this 27,000, the first purchase, that is opening stock 10,000, that is 10,000 into 92 plus remaining 17,000 into 90. Then you will get cost of goods sold. Then if you compare the sales value, they already given the sales value, sales minus cost of goods sold, then you will get the profit. So that means this problem is not exclusively taken from AS2. So the roots actually they touched. Guys, such type of questions again proving that mugging up the subject will not give the score, or mugging up the subject is not at all useful for the purpose of cracking the examinations. Persons who have the subjectual and the conceptual knowledge, they may simply crack the examinations. So number of times the same thing I am repeating in our classroom environment as well. Even I will explain the n number of questions, they might ask the n plus 1th question. But if you have a good knowledge to resolve such questions and the practice which you actually gained at the time of resolving such n number of questions is highly useful to crack the n plus 1th question. That is the level of attitude you should bear in your mind. Okay, come below. So the question is not the new, guys. So don't tell this question we not yet covered. We already covered in the form of conceptual things. Exclusion part, you should exclude that. And cost formula, we already discussed about the FIFO method. Okay, everywhere we are discussed, guys. No even single question is asked from out of our the syllabus or out of our material. Everything is covered. Next, coming to question number C. What about question number C? That asked for AS10, the concept of revaluation. They asked from the concept of revaluation. What about the question, sir? First, you are required to calculate the revaluation loss as per AS10 and give its treatment in the books of accounts. Sir, first he asked about revaluation treatment, right? We already discussed the concept of revaluation in AS10. Let me open that. So this is about AS10. This is about AS10, where we discussed about revaluation concept, guys. Yeah. So this is about accounting treatment of revaluation. Are you seeing this diagrammatic representation? We already discussed. Sir, first time upward revaluation, you should need to increase the asset value as well as reserve value. That is that PPE to revaluation reserve is the entry. And further also upward. Again, you should pass the same entry, that is PPE to revaluation reserve. No. First time upward, but the second time you are making the downward. Now the loss need to set off with the revaluation reserve to the extent balance occurred due to upward revaluation. And the further, if anything loss is there, then you can debit it to the P&L. The same actually they tested here. If you observe, the carrying amount of the property at the end of the year amounted to 2,16,000. That is original cost 2,50,000 and depreciation 34,000. Then you will get net carrying value 2,16,000. On this date, property was revalued and was deemed to have the fair value of 1,90,000. 2,16,000 to 1,90,000 means 16,000 is the revaluation loss. 16,000 is the revaluation loss. The balance on the revaluation surplus relating to a previous revaluation gain. That means previous revaluation gain means in the previous year, which was upward, their revaluation reserve is there. Now it is going to be downward. Now the revaluation loss should need to set off with revaluation surplus. Am I right, guys? So the balance on the revaluation surplus relating to a previous year revaluation gain for this property was 20,000 he was given. Sorry, here revaluation loss how much? 1,90,000 minus 2,16,000. which is 26,000. Now this 26,000 loss, you can set off with 20,000. Still revaluation loss is there 6,000. Such 6,000 you can debit it to the P&L. That means out of this 26,000, you can set off with revaluation gain to the extent of 20,000, and remaining you can debit it to the P&L, which is 6,000. That is the accounting treatment. Tell me guys whether you discussed or not in the classroom. The same concept is proving here. Sir, this one note I'm not drawn right now. I had drawn at the time of delivering the lectures. I am opening the same content and I'm proving here. So that's why classrooms as well as our classroom notes and our material is very much important, guys. Fine. Next. One more question. Actually, they asked, you are required to explain how the disposal should be accounted for in the financial statements. If you sold the PPE, the profit or gain, you may the gain or loss you may transfer to profit and loss account. Original cost 76,000, depreciation 62. The difference is the net book value, which is 14,000. 14,000 net book value you sold for 4,000 cash. Then 10,000 is the loss. Such 10,000 loss you may debit it to the profit and loss account. Such concept also I explained clearly. If you observe here, yeah. If where it is, come down. Derecognition concept. Now at the time of disposed, the gain or loss you may transfer to profit and loss account. You may transfer to profit and loss account. I clearly explained such concept, guys. Okay. So the same thing actually they tested. So the loss of 10,000 you may transfer to P&L. Next, come to the next question, guys. Question number 1D. What about question number 1D? AS16. So a direct question, which is question number 2, actually we discussed in our standard. First, let me check what this question is all about. You are required to calculate the amount of interest to be capitalized as per the provisions of AS16. How much amount you can capitalize, and pass a journal entry for capitalizing the cost and the borrowing cost in respect of the plant. Now there are two borrowings exist. One is specific borrowing, another one is general borrowing. Special loan is a specific borrowing. It is a specific borrowing. 46 lakhs is a general borrowing. Am I right? Now, the thing is, on the specific borrowing, you can apply directly the given rate of interest, which is 20 lakhs into 10%, which is 2 lakhs for the entire year. 2 lakhs is the borrowing cost for the entire year. Now, out of this non-specific loan, how much you are utilized for the purpose of construction of the business? The total cost, construction of plant. The total cost incurred for the construction was 10 plus 24, 34 plus 4, 38. Out of 38 lakhs, you already utilized 20 lakhs of specific borrowing. That means the remaining only utilized from the general borrowing. Now, how you can work out the weighted average cost you should need to work out? That is 10 lakhs into 12 by 12 plus 24 lakhs into remaining outstanding number of months. How much? From 1st August to 31st March. August, September, October, November, December plus 3. That is 8 by 12 plus 4 lakhs into how much here? 3 by 12. Now you are having certain weighted average expenditure. Out of such weighted average expenditure, you should need to reduce 20 lakhs, which are the specific borrowings. Now on the remaining borrowings, you can apply the capitalization rate. Here only one borrowing is there. That capitalization rate itself is given at 12%. That means out of the total weighted average expenditure, you should reduce the specific borrowings amount. Then the net weighted average expenditure, you should multiply it with the capitalization rate of 12%. Then you will get the borrowing cost on the general borrowings. Now, if you add the borrowing cost on the general borrowings and specific borrowings, then you will get the total borrowing cost. Now they clearly given that that is the asset is a qualifying asset. That's why the borrowing cost we are in generally added to the qualifying asset. So original cost also we should need to add it to the plant, as well as borrowing cost also we should need to add it to the plant by passing the entry plant to bank account. Sir, I will open that question. No need to mention everything we discussed there. Just let me give some time space to me. I will directly open AS16. So which question number actually I mentioned? Question number 2, right? I'll open that. it is better to open material. Just a second. So I'm opening our general material we are using for the classroom discussion, where the discussion is related to AS16, right? Fine. So this is the question, guys. Actually, if you observe the same type of question, actually they might ask. Okay. Question number 2, similar to question number 2, where in the question number 2, if you observe, certain borrowings they taken for the specific borrowings which are special loan, they clearly mentioned this fact, which is a special loan. Are you observing this? 1 lakh special loan in our original material. Then the remaining are the general borrowings. Certain expenditure they incurred. Now what you made? First, on specific borrowing separately, you calculated the borrowing cost. So this is our one note. Yes. If you observe, the answer will be like this. So on the specific borrowings, you separately calculated. Now on the general borrowings, first you calculated the weight before calculation of borrowing cost on the general borrowings. First you work out the weighted average cost. Out of that weighted average cost, you reduce the specific borrowing, and the remaining you directly apply. You can directly apply the capitalization rate. That itself only one general borrowing is given in the problem, in the examination problem. That's why you can directly use the 12%. The same question we already discussed in the classroom environment. Just they're giving a small modifications, and just they asked in the exam. Next, guys, this is all about question number 1. Now, sir, what I can say by seeing all these 4 questions in the examination, sir. Sir, one thing is sure, from accounting standards, what the questions you actually practice it either in the classroom or in the revision process, the same questions may not asked in the examinations, but they definitely test your level of knowledge. If you have that level of knowledge, then you can crack such questions very much easily. So why I am telling that point here, only question number 2 only you may practice. What about the remaining 3 questions? They directly asked from the concept, what we discussed in the classroom. Do you understand? Because we may not frame each and every question for each and every concept, or they may jumbling each and everything. Do you understand? Fine. But everything was covered. That promise actually I was made before taking up this class itself. Sir, every concept we actually covered in classroom, the same thing they tested. Fine. Next, come to question number 2, guys. Sir, what this question number 2 is all about? First, let me check here. Question number 2 is hire purchase, guys. Hire purchase. What they asked in the hire purchase, this problem is related to partial repossession. Partial repossession problem. Agreed value of 2 bikes taken back by Nita. Book value of the bike left with Mita. Profit or loss to Mita on 2 bikes taken back by Nita. The similar question I will show you here, guys. Just give me 1 second. The same and the similar question, where I clearly mentioned here in our resource, which is problem number 9, right? Let me open the hire purchase. Yeah. So here, hire purchase. So you can directly go to problem number 9. Same question, guys. Agreed value of 2 cars taken back by the hire vendor. Are you observing this? And the book value of the car left with the hire purchaser. They actually divided into 2 sub questions in the examination. If you observe, just they subdivided into 2 different sub questions. 1 second, please. Yeah, now you can see. Sir, here, what the questions they actually ask? Agreed value of 2 bikes. Here, agreed value of 2 cars. And the book value of the car left with the hire purchaser. And the second question, book value of the bike left with Mita. Mita is the hire purchaser. And profit or loss to Mita on 2 bikes taken back. Profit or loss to hire purchaser on 2 cars taken back by the hire vendor. Just the change of the names. The same question we already explained through problem number 9, which is a jackpot question. Directly you can get it 10 marks. Okay. Sir, I already clearly informed you. This lecture is not about explaining the answers. This lecture is purely whether this question paper level is crackable or not with the level of knowledge you got through lectures and the concept you gained during the classroom and through your preparation. Just we are cross-checking. Next, come below, which is question number B, which is asked for again 10 marks. The question is for insurance claims, guys. So which is a basic problem on loss of stock and loss of profits. Now, the question is pretty much simple, guys. Now here total you should work out for two things. One is loss of stock, another one is for loss of profits, where it is given. You are required to compute the claim to be lodged with the insurance company for loss of stock and loss of profit. But the problem is too simple, guys. We are very much lengthy problems actually we done in the classroom, but compared to the classroom problems, very few adjustments covered. But one adjustment is beautiful adjustments. That is the heart of the entire problem. Now I will tell you that one. So first, loss of stock, right? Sir, for loss of stock, how we should need to work out claim in case of loss of stock? First, you should require stock as on date of fire. From the stock as on date of fire, you may reduce the salvage stock. Then you will get loss of stock. After getting the loss of stock, if average clause is applicable, then loss of stock into, loss of stock into policy amount divided by stock as on date of fire, you may work out. Then you will get claim to be larger in case of loss of stock. That is the procedure we are in generally following. But the question is stock as on date of fire, how I should know? That is the important issue here. Now, if you observe, for accident was occurred as on Jan 31st, 2022. Now I required stock as on Jan 31st, 2022 to know the stock as on date of fire accident first. But the given information, how they given, company's records show that the turnover for January 2022 of 100 lakhs had been the same as for the corresponding month in the previous year. Now, first let me talk about the current year, Jan 2022. Only 1 month is there. In the fire accident occurred year, sales, fire accident occurred period, sales from the current date of the financial year, that is they are following the calendar year, that is 1st January 2022 to 31st January 2022. The sales were given at 100 lakhs. Sales are given at 100 lakhs. Next, they are not given the purchases. We know the opening stock because last year closing stock is the opening stock. We know the sales, but we don't know the purchases. You should need to work out the purchases from the given information. From the given information, if you can able to work out the purchases, then you can derive the closing stock as the balancing figure. Sir, then how can I work out the purchases figure, sir? Now you can apply your incompleted records knowledge, guys, because they are not providing the information of the purchases. What they are talking in the problem, payments made in January 2002 to trade creditors were 106. So the creditors balance was given at 106.68 lakhs. That is, sorry, not the balance, the payments made in the current year. And the closing balance was more than 3.32 lakhs while compared with opening balance. I mean, if this is the trade creditors, opening balance, we don't know X. Closing balance is X plus 3.32. And they told that in the current year, you paid the creditors 106.68. Now the balancing figure is nothing but credit purchases. The balancing figure itself is credit purchases. Now, if you know the purchases, then if you can prepare the memorandum trading account, you know the opening stock, you know the purchases. Now, through preparation of creditors, just now you find the purchases. They already given the sales. Then closing stock you may derive as a balancing figure. Then which is stock as on date of fire. There is no salvage stock. That's why maybe the stock as on date of fire, you can compare with the policy amount. Then average clause is applicable. Then accordingly you can apply. Otherwise, the claim will be the loss of stock. And for the loss of profits, directly they provided the information, guys. Actually, 6-step approach we learned in our classroom. No need to apply such 6 steps. The 3 steps is more than enough, and such 3 steps also they're completely diluted. They completely, such 3 steps also you can dilute completely, because the information is very easily just they drafted. Company's business was disrupted until the end of April 2022, during which period the turnover fell by 180 lakhs compared with the same period in the previous year. That is short sales itself directly they given. Now you can work out the GP percentage. Short sales they're directly given. If you can apply a GP percentage on the short sales, then you will get loss of profits here. Now step number 4, GP on AAT, such all things no need to calculate. You know the reason why? Because here claim on additional expenses, nothing was given. Regarding the additional expenses, there is no information. That's why only you can find the loss on short sales. That itself is more than enough for loss of profits. Then if you can apply the claim for loss of profits and loss of stock, then you'll get the gross total claim. That's it. So that is the point actually they asked through problem number B. Okay, that is the general problem, guys. With the conceptual knowledge only you can crack that. But what is required? How to calculate the purchases information? You should think from your mind from the given information. That is the reason why I am telling you conceptual knowledge is superior than questions. But we never do a problem to get the purchases through preparation of the creditors account in the chapter insurance claims. But number of times we derived the purchases information through preparation of creditors in incomplete records. Such a chapter knowledge you should need to utilize here to know the purchases information. That is the application mindset is required here. Okay, just leave it. This is all about question number 2. Next, you can come to question number 3, guys. Sir, question number 3, incomplete records, which is asked for 12 marks, which is a basic incomplete records problem, guys. All the adjustment we already discussed in the various problems in our classroom, all the adjustments. So just you can resolve these question marks. Actually, I already told the procedure we should need to adopt while resolving the incomplete records. First, the required statement you should need to open. What is the required statement? Trading and P&L account and balance sheet. The required statement you should need to open. And apart from that, opening balance sheet also you should need to open. Then debtors information we may get through debtors account, that is opening debtors, or the stock information you may derive as a trading account balancing figure. Trading account balancing figure maybe, and the cash account is the balancing figure of the cash account maybe. Now you should need to open debtors account, creditors account, and a cash account also. And if any other account is required, you may know after reading the problem. Then read the problem entirely, line by line. Then for all the required statement, whether it is working note or the main statement, you can just make it posting at a single point of time. Then which account you should need to close, you know logically. First close that account, then you may get one balancing figure. Such balancing figure you may post it to the another account, then you will get another balancing figure in that particular account. The same procedure you can adopt for this question as well. The problem information is pretty much easy. Collection from debtors, payment to creditors, expense paid, drawings by drawings, discount allowed, discount received. There is no bills payable, bills receivable information also given. There is no complications in the problems. So credit sales amounted to so and so, cash sales amounted to 10% of the total sales, credit purchases for 80% of the total purchases. Everything you can get it. Something related to equipment just he given. Okay, remaining all are very much simple, guys. So something he is talking about the building and the furniture. The similar problem also actually we made in our classroom, but I not mentioned separately. Okay, just leave it. Then come to the next question. What this question is all about? Let me check here. So departmental accounts. The next question they asked for departmental accounts, which they asked for 8 marks. Sir, what they required? You required to prepare departmental trading and profit and loss account for the year ending 31st March 2022. Sir, opening stock, they itself directly provided for the various departments. Opening reserve for unrealized profit. So this in general we are not considered in departmental trading and P&L account. Now you can also ignore. In consolidated trading and P&L account also sorry, in consolidated trading and P&L only, we are going to consider the stock reserve concept. Opening reserve means opening stock reserve. We should not consider the stock reserve either on opening or the closing in the departmental trading and P&L. We are always considering such things in consolidated P&L or the general P&L or the organization overall P&L only. Just leave it. Material consumes directly given, direct labor directly given, closing stock also given, sales also given, area occupied and number of employees. These are the bases you can use for the purpose of apportionment of other expenses. Maybe if you check here, salaries are there. Salaries, how you should, salaries and staff welfare, how you can apportion based on the number of employees ratio. And the rent, how you can apportion based on the area occupied. Am I right? Similar problem actually we made in our departmental accounts, which is problem number 3. Sir, what about the stock reserve? Simply you can ignore in preparation of departmental trading and profit and loss account. But if you want to know the overall organization profit and loss, then you can consider such things, guys. Okay. Do you understand, all of you? Fine. This is about departmental trading and P&L account. If you want, I'll show the similar question as well. That is problem number 3, right? Let me open departmental accounts. Yeah. So you can observe here. So floor space just they given here. Number of employees in each department they given here. So the expenses like rent rates and taxes, we may use that floor space. Again, on labor welfare expenses, you can use based on the number of employees. Salaries you can use based on the number of employees. Like that, the basis you can use respectively and apportion such expenses. We already seen. And the stock reserve, we should not consider in preparation of departmental trading and P&L. We may consider in consolidated trading and P&L, but they asked to prepare departmental trading and P&L only. That's why stock reserve concept should be ignored. Next, what about the question number 4, guys? Just a moment. Yeah. So this is pretty much surprise to me as well. Profit or loss pre and post incorporation, they asked for 20 marks, guys. Sir, this question is completely jackpot question to you. Jackpot. 20 out of 20 you should need to achieve. I too never expected profit or loss pre and post incorporation chapter weightage is 20 marks. That's not like that actually. So just they are jumbling like that. So this time profit or loss pre and post incorporation, they ask for 20 marks. Maybe next time they might ask only for 8 marks. There is no issue at all. This is the first time actually in the last 8 to 9 attempts. That is whenever the new syllabus coming to the picture, this is the first time actually they tried question from profit or loss pre and post incorporation for 20 marks. But guys, whether you believe me or not, each and every adjustment we already done in our classroom environment, and the question is too much similar to our classroom discussed question. I already wrote that as well, which is a clear-cut problem number 6. Let me open that. Profit or loss. One second. Which is problem number 6, right? I told you. So right, guys, you can check here. The same type of question actually they asked, which is like problem number 6. Similar question actually. If you observe sales, cost of goods sold, rent, salaries, traveling, depreciation, printing, interest to vendors, preliminary underwriting commission, fixed assets, okay, current assets, school limiteds, capital, something, current liabilities, debentures, every information actually they given, but out of which we should need to consider the P&L expenses, the P&L items only. You are required to prepare the profit and loss statement in a columnar form for the year ended 31st March 2022, showing the allocation of profits pre-incorporation and post-incorporation periods, indicating the basis of apportionment. Okay. So all the adjustments I already discussed in the classroom. That's why once again, I don't want to take up here. This is about problem number 4, guys. Maybe some of the adjustment we may not directly cover. In one problem, one adjustment may cover. In another problem, another adjustment may cover. But everyone was covered there. So 20 marks is out of pocket question directly. Next, come to question number 5, guys. Here, question number 5. One is related to redemption of preference shares. They asked for 10 marks. Similar problem actually we made. Similar, not similar, direct problem actually we made here. That is not the similar problem. I'll show that. Just give a moment. What is that? So it is decided to issue sufficient number of equity shares of rupees 10 each at a premium of 25% after leaving a cash balance of 50,000 in the bank account. They ultimately required necessary journal entries. What they're actually making, board of directors decided to make a final call of 20 rupees on redeemable preference shares and to redeem the same at a premium of 10% on 1st June 2021, because partly paid up preference shares we may not redeemable as per the Companies Act 2013. First, they are making fully paid up. After that, they are making redemption with a premium. So for that purpose, the existing investments they are selling at the rate of 150%. Maybe they are getting profit. Such profit or loss you can transfer to P&L. And they're also decided to issue sufficient number of equity shares. But how much number of equity shares we need to issue? We need to calculate actually after leaving a balance of 50,000 in the bank account. This is actually minimum number of fresh issue of equity shares to be issued under fund approach. Under fund approach, actually minimum number of fresh issue of shares need to be issued for redemption of preference shares. In two way actually I deal. One is to comply the section 55, I think so, and another one is in fund approach. I'll open that just a moment. So this is redemption of preference shares. So this is direct question, but first let me show the concept actually. Yeah. Guys, if you can check here, redemption of preference shares through minimum fresh issue of shares to comply the section 55. In one angle we discussed. In another angle, minimum fresh issue to provide the required funds for the redemption. There is another angle we discussed. Now this problem is they are asking in fund approach. It is decided to issue sufficient number of equity shares of 10 each at a premium of 25% after leaving a balance of 50,000 in the bank account. They are talking about the funds. That's why you should need to resolve on the basis of the fund approach. That is existing bank balance, how much, and proceeds from sale of investments, how much. Then the total fund available for redemption, you can check. Then minimum number of shares issued for redemption of shares under fund approach equal to payment required for redemption minus fund available for redemption divided by issue price. Do you understand? This the same with this concept actually they tested. This concept actually they tested in the examination. The same question was already discussed in the classroom. Which number I mentioned here? Problem number 9. Let me open that problem. So redemption of preference shares. I covered that in marathon as well, guys. So profit or loss pre and post incorporation also I covered in marathon, and redemption of preference shares also I covered in marathon. Okay, here itself 20 plus that 8 or 10, almost 30 marks are there, and certain accounting standards were also covered in my marathon. So if you blindly follow my marathon itself, you can directly cover 60 to 70 marks. Okay, just a second. So redemption of preference shares, right? Let me directly check with problem number 9. So you can cross check here, guys. This is the examination problem. This is our classroom problem. This is classroom problem. This is examination problem. One second. Yeah. Now you can cross check what they given here. Here they are selling certain investments, right? You can check here to sell all the investment for so and so. Next, to finance the part of redemption from company funds subject to a leaving a certain bank balance. To issue the minimum equity shares of 50 each share to raise the balance of funds required. You are required to pass the necessary journal entries. They also tested the same thing here. What they actually given? They decided to leave a certain bank balance here. They are also selling certain investments and sufficient number of equity shares they want to issue. The sufficient number of equity shares are nothing but minimum number of shares to issue under funds approach, guys. Okay. So that also, if you are my student, you can easily crack this, guys. Okay. The similar question and the almost same question we already discussed through problem number 9. Next, coming to the branch accounts, guys. Sir, branch account 10 marks. They directly asked the stock and debtors method question, guys. Stock and debtors method. Stock and debtors method. Stock and debtors method under two-way actually we discussed. If the goods are sent by head office to branch at cost, if the goods are sent by head office to branch at a invoice price, out of which they are not tested this, they tested this. If the goods are sent by head office to branch at invoice price, it invoiced goods to it branch at 20% less than the list price, which is cost plus 100%, with instruction that cash sales were to be made at invoice price and credit sales at catalog price. Do you understand? This is a direct question from stock and debtors method, guys. But the wording or the terminology just they're given in a little bit different manner. Just you should need to work out according to the problem information. That is question number 2 or 3. We directly discussed the part, the similar type of question. Similar type means stock and debtors method, goods sent at invoice price. I'll open that just a moment. Branch accounts. Yes, guys, come below. Either you can come to question number 2 or question number 3, I think so. Yes, guys, you can check here, which is stock and debtors method question. The goods are sent at 20% above the cost price. The similar type of question actually they tested, which is related to stock and debtors method. They asked for 10 marks. Next, coming to the last question, which is question number 6. One question is related to financial statements of companies. They asked for managerial remuneration. So similar question we made. Here, profits are available. So managerial remuneration, we are in generally calculating in 2 ways. If sufficient profits are not available, then based on effective capital. If sufficient profits are available, then as per section 198, we should need to calculate. Then the limits are also possible, right? That is the overall, it should not exceed the 11%. So certain overall limits are also given. Accordingly, we should need to work out. So let me open that first, what the question is all about. You are required to calculate the managerial remuneration for EXC Limited as on 31st March 2022 in the following situation. There is only one whole-time director. There are two whole-time directors. There are two whole-time directors, a part-time director, and a manager. Now, first you should need to work out the profits. Profits as per section 198. After work out the section 198, if there is only one whole-time director, if there is only one whole-time director, then it should not cross maximum 11% of the net profits. There are two whole-time directors, then it should not cross 5% of the net profits. Tell me, guys. There are two whole-time directors, a part-time director, and a manager. Then at that point of time, each and every individual person should not exceed the 5% of the net profits. And for the part-time directors, whether they are getting any managerial remuneration, guys, tell me, all of you. So let me open the diagrammatic representation. So they asked from financial statements of companies. So come down. calculation of managerial remuneration. So first you should need to calculate the section 198 profits. So how you should need to calculate everything I already discussed. So now here, company having the adequate profit. The total managerial remuneration payable by a public company to its directors, including managing director, whole-time director, and its manager in respect of any financial year, shall not exceed 11% of the net profits of the company for that financial year. Overall 11%. The remuneration payable to any one managing director or whole-time director or manager shall not exceed 5% of the net profits of the company. And if there is more than one such director, remuneration shall not exceed 10% of the net profits to all such directors and manager taken together. Now, there is only one whole-time director, overall 11%, but for that whole-time director, it should not exceed 5%. That is the point actually they are mentioning. Next, there are two whole-time directors. Sir, if there are two whole-time directors means it is clearly given that, and there is more than one such director, then remuneration shall not exceed 10%. Overall, it shall not exceed 10% of the net profits. Individually, it should not exceed 5%. For the overall two whole-time directors, it should not exceed 10% of the net profits. There are two whole-time directors, a part-time director, and a manager. At that particular point of time, also it should not exceed 10% because it is clearly given that if there is more than one such director, remuneration shall not exceed 10% of the net profits of all such directors and manager taken together. So that's why here it should not exceed 5%. The total here it should not exceed 10%. Here also the total it should not exceed 10%. For that purpose, first you should need to work out the profits. How to work out the profits? You already know. That's why this question is similar to problem number 9. If you want, I'll open the problem number 9. A similar question actually we work out, but there actually different cases were not given in my problem. Just we work out what is the maximum managerial remuneration. That's it. But here given different cases. That is the only difference point. That is the only difference actually. So here problem number 9, if you check here, you are required to calculate the maximum limits of the managerial remuneration. So the same information more or less just they are given. If you observe question paper, yeah. So you can check here net profit before income tax and managerial remuneration, but after depreciation and provision for repairs, depreciation, provision for depreciation allowable under schedule 2, something certain adjustments are given. In our classroom also we made the similar adjustments actually, that is depreciation on property, plant and equipment, and schedule 2 depreciation they are given separately. Okay, so like that certain adjustments actually in common in both the problems, guys. Sir, but one thing is sure, guys, don't expect the same question as like in the classroom. That never possible. Similar questions they might ask, the similar adjustment they may ask. Okay. Next, bonus and right issue, guys, which is easy problem. The similar problem actually is there in our material, which is problem number 9. First, I'll open this. You are required to pass necessary journal entries in the books of Sujata Foods Limited for bonus issue and rights issue. You know, for bonus and rights issue, the entries are very much common. That is CRR account data, general ledger account data, P&L account data to bonus to shareholders to equity share capital account, and the right shares, bank account data to equity share application and allotment, or equity share application and allotment to equity share capital. That is the similar actually. But one thing is different point they are mentioning here. Minimum reduction in free reserves. Minimum reduction in free reserves means maximum you can utilize through CRR actually. Am I right? They might given the capital redemption reserve here. So you can use the capital redemption reserve, and securities premium also can we utilize for issue of bonus shares? Securities premium, guys. I think so. Securities premium, one of the utilization of securities premium is also for the purpose of issue of bonus shares. That's why max you can utilize these two things. Less amounts you can utilize the general ledger and profit and loss account. That point actually they mentioned there. Let me open that question as well directly, just for your confidence whether we covered or not. Yeah, this is about bonus shares. Go to problem number 9, which is the last question, guys. If you observe here, they decided to capitalize its reserves by way of bonus at the rate of 1 share for every 4 shares held. It is decided that there should be minimum reduction in free reserves. So the same thing actually we tested, guys. There should be minimum reduction in free reserves. They are also given here. There is a minimum reduction in free reserves. The same thing. Actually, they mentioned the similar problem, guys. Same to same, more or less similar problem. Next, come here. Question number 6C. What it is? AS1 actually. That is from fundamental accounting assumptions and accounting policy concept. They tested what the problem is all about. State whether the following statements are true or false. Also give the reason for your answer. Certain fundamental accounting assumptions underline the preparation and presentation of financial statements. They are usually specifically stated because their acceptance and use are not assumed. So the given statement is straight away false. You know why? Sir, fundamental accounting assumptions, if you follow, no need to mention. Certain fundamental accounting assumptions underline the preparation and presentation of financial statements. They are usually specifically stated because their acceptance and use are not assumed. No need to specifically state. If such fundamental accounting assumptions are violated, then we may state. The same thing actually we discussed a number of times, guys. Tell me, yeah. Okay. I'll open AS1 also for your convenience. Just hold for a second. Here AS1 is there. So you can check the fundamental accounting assumptions. Assumptions assumed to be followed by entity at the time of preparation of financial statements. Fine. Followed, no need to provide separate disclosure. If we followed, no need to give a separate disclosure. If you are not followed, then only you can give a disclosure. From that point, actually they tested. Do you understand, all of you? Next, if fundamental accounting assumptions are not followed in presentation and preparation of financial statements, a specific disclosure is not required. No, a specific disclosure is required. Again, false. Here they given is not required, but it is required. False. All significant accounting policies, sir. If you know the concept, you can easily write the answers for both the questions actually. All significant accounting policies adopted in the preparation and presentation of financial statements should form part of the financial statements. Obviously, policies are also form part of the financial statements. What are all the different policies you made under notes to accounts? Notes to accounts are form part of financial statements. Yes, true. Any change in accounting policy which has a material effect should be disclosed. Where the amount by which any item in the financial statements is affected by such change is not ascertainable wholly or in part, the facts need not be indicated. No, facts need to be indicated. It is clearly mentioned. Just come down. At the time of change in accounting policy, if it is material in current period or reasonably expected to impact in the future periods, amount need to quantify. No, unable to ascertain the amount, fact should be disclosed. But what they are given, such facts need not be indicated. False. Do you understand? So this question is directly they tested from AS1 content. So we already discussed it through concept, but a separate question we not discussed, guys. Next. So guys, two more questions are there, right? Out of that, question number D is related to cash flow statement. Okay, surprisingly, cash flow statement just they asked only for 5 marks, guys. So profit or loss pre and post incorporation they tested for 20 marks. Cash flow statement they tested for 5 marks. Apart from that, there is no surprising event from my point of view. Okay, so that is the basic cash flow statement actually they tested. You need to prepare the cash flow statement by using the indirect method. Okay, if you know the knowledge about that, then you can easily finish it off. That is not a big deal actually. So every adjustment actually we already discussed in the classroom. Same to same, that is directly net profit just before taking into account of income tax and certain all other things they given. Then from there you should start. That is profit before tax, then non-operating and non-cash items, then everything you may sort out. That is changes in current assets, changes in current liabilities. So like this you should need to work out. Information was directly given. Nowhere actually working notes required here, but if anything is there, then you can put that. Next, one of the last question. is from investment accounts. Again investment accounts also they tested for only 5 marks. The logic is pretty simple, guys. Why the cash flow statements and investment accounts actually they tested for 5 marks? They already allocated more marks for profit or loss pre and post incorporation. They allocated for 20 marks. In generally the allocation is for 8 to 12 marks only. So that is the reason why the allocation shifted for cash flow statement and investments account towards 5 marks. Investment account also, you are required to prepare the investment accounts which related to variable income bearing securities. The same problem, almost same problem we discussed in our classroom environment, which is problem number 11, guys. I'll open that just a moment. I'll show you that. Investment accounts. Fine. Problem number 9 I mentioned, right? 8 or 9. 11, sorry, I mentioned problem number 11. Let me open problem number 11 here. Then if you can cross check this, the same similar problem actually they tested. You are required to prepare investment account in the books of so and so. Here also investment accounts. So initially certain shares are there. In between bonus shares they issued and right shares are also issued. And finally they sold certain investments and the rest of the investments are there as on 1st November 2021. So similar thing actually happened here as well. If you observe, except this dividend issuers, they are not mentioned. This paragraph is not there in the examination problem. Remaining all are there. They issued certain right shares and they issued certain bonus shares. Here bonus shares are there. Okay. Then finally they sold certain equity shares. Then they asked to prepare the investment accounts. So similar problem actually they tested, guys. But in my point of view, these two problems are actually a little bit lengthy problems. So A, B, C are it doesn't take that much of time to close such problems, but these problems take much time. Sir, what is your view, sir, after seeing this entire question paper? Guys, not only this accounts question paper, I seen certain other question papers as well. Persons who have the conceptual clarity, they can give the best answers in the examinations, but the students who mug up the content without understanding the concept, they definitely give the correct answers in the examination. So the reason is very much simple. They are not asking the questions directly, they are framing the questions with a little bit of applying the logical mindset. So that's why my sincere request to all of you, please build the conceptual knowledge in your mind before going to the examination and practice such a problems, and don't expect the same problems in the examination. The problems which you practice in your preparation is useful to resolve the problems in the examination. So your mindset should be like that. I think so for all our future attempts will also be look like this. There is a tremendous change occurred in the CA examination pattern as well. The question paper is not tough, guys, in my point of view. But the student, if it feels it is like a tough question paper, then the answer is very much simple. They are mugging up the subject. Okay, so please all of you come out of that mindset. If you are really my student, then you may think in that angle only. I mean, you may visualize the problem, then you can give the answer accordingly. Okay, hope you enjoyed that entire question paper analysis. So here I not discussed the answers for any question. So just I tracked each and every question and with our materials and our concepts. So no question is asked from the new concept which was not covered in our classroom. Every concept was covered, and the questions are also I simply tie up with that concept as well. Bye bye, guys. Have a nice day.